I think you have to point to the Federal Reserve, Brian. Certainly, the complete reversal that we saw from Jay Powell and company at the start of the year, and the rollback just in rhetoric, but also in policy as well. Enormous gains from the Fed, I think, this year, and it points to the fact that this was likely a policy mistake that we saw late last year.
What's the mistake?
I think pushing rates when inflation was as tame as it was, slowing global growth. Why do that? It basically turned what was a pro-growth agenda into a liability, creating a deficit. And I don't think that's what the administration wanted. I don't even think it's what the Fed wanted. And I think they understand that. And this is a battleship. Normally, they don't move this fast. It's stunning how quickly this reversal takes place.
Is it the right move, though? I mean, the president obviously wants a rate cut. Larry Kudlow wants a rate cut. Likely Fed nominee Stephen Moore wants a rate cut.
Yeah, I think you could point, to the politics of this, but I think Jay is smarter than that. I think despite the pressure from the administration, I think this is about data. And the data is slowing, and we don't live in a vacuum. 40% of S&P 500 revenue is offshore. You actually see it in the sectors as well. Nearly every sector had negative revisions, and the three most exposed to global growth and the three most exposed to offshore revenue, energy, technology, and materials, had the biggest cuts.
Is any of that move in the first quarter and the strong futures this morning, does any of it, David, have anything to do with the idea that it looks like we may get a resolution to this China trade fight?
I think it's part of it, and I would put, some of the positive PMI data coming out of China in context. Massive stimulus in their banking sector. They've been instructed to loan out money at a record pace. I think that points to it. Steven Mnuchin has said that talks have gone well in Beijing. It probably weighs, it's probably part of the rhetoric at this point, but it's pretty clear that the math does not work for China. They have to make this deal. They need this deal more than we do, as much as we need it.
Is China's stimulus enough to continue to power their market, enough to continue to help power our market?
I think it's a positive, but I think in the end, you're going to have a deal if their market's going to continue. But it's not going to change the rhetoric. It's not going to change the dynamic between us and China. They are, they're simply an adversary in almost every sense, geopolitically, foreign policy, and, of course, economically as well.
6 to 9 months ago, a year ago, sort of the macro discussion was this. Trade fight with China, they're going to dump treasuries, rates are going to spike, hurting the U.S. economy. The exact opposite has happened.
I was looking at the numbers coming in today. Almost every asset class on the planet was up in the first quarter. I think the only thing that was down was the euro. The best performing, the only asset class that actually beat the United States was really oil.
Crude oil.
Oil.
Up 33.5% this year.
Pretty extraordinary. And so that sort of points to that maybe what's going on around the world isn't as bad as we
Bottom line is this. Do we still own stocks, or with these gains, should we take a little profit? Because, man, what do they say? Pigs get fed, hogs get slaughtered.
Where are you going to put your money? With rates where they are today, there's just not a lot of places you can put your capital at this point.
So the TINA trade, there is no alternative, is still on?
I think it still plays, because in the end, it's like, discounted cash flow. Where are you going to put your money? The multiple has to go higher with rates this low. It's as simple as that.
Is cash a terrible place to be? Is there any risk out there at all, Dave?
You saw a lot of money go into bonds, corporate bonds, back in September, but rates were pushing much higher back then. Everybody started to de-risk. Where rates are right now, I think the biggest risk for me is largely overseas. The kind of thing that you see in the emerging markets, principally in a place like Turkey, what you saw last night.